Imagine waking up to headlines of stock market turbulence or even a sudden spike in oil prices following an election. The thought of a second Trump presidency has stirred concerns among economists and investors alike, many of whom expect a Trumponomics 2.0 era to impact everything from corporate profits to international trade and even geopolitical stability. Trump's policies are famously bold and often unpredictable, adding a layer of uncertainty that has markets bracing for major changes. With promises of corporate tax cuts, looser regulations, and a possible return to hardline stances on trade, there's a lot at stake for both American businesses and international economies. In this video, we'll dive into the potential impacts of a Trump presidency on the economy, exploring how stock markets, global trade, and even your pocketbook could be affected. The potential return of Trump could bring significant shifts to the US stock market, as his policies often favor big corporations. He has promised more corporate tax cuts and relaxed regulations, which would allow companies to maximize their profits, benefiting sectors like banking, energy, and technology. Since news of his candidacy, the markets have already shown signs of volatility, with investors trying to predict how these policies would play out. For instance, analysts at Goldman Sachs estimate that major US businesses could see up to a 4% increase in their earnings if corporate tax rates are slashed again. When investors anticipate higher profits for these companies, stock prices tend to rise as more people buy shares, creating an upward trend in the market. However, this boost might not extend to all sectors. Companies relying heavily on international trade, especially those based in Europe, may face adverse effects if Trump implements tariffs on imports. European car manufacturers, for example, could see reduced earnings as a result of higher export costs, leading to lower share prices for those companies. This complex situation shows how Trump's policies could drive stock gains for some US-based corporations while hurting others, especially those deeply embedded in global supply chains. Trump's stance on trade has always been centered on protecting American jobs and industries, often by implementing tariffs on foreign imports. During his first term, Trump's tariffs on Chinese goods and other imports were aimed at bolstering domestic manufacturing. In a recent statement, Trump praised tariffs, even calling the word beautiful, suggesting he would likely resume or even escalate these measures in his second term. Economists predict that this could mean new tariffs ranging from 10% to a steep 60% on goods from certain countries, especially China. While tariffs can support domestic industries by making foreign products more expensive, they also drive up the prices of consumer goods. For example, the Peterson Institute for International Economics found that reinstating tariffs and expired tax cuts could reduce post-tax incomes, costing the average American household around $1,700 more each year. The last round of tariffs didn't lead to a significant increase in US manufacturing jobs, but instead caused companies to move production to other countries to avoid the high tariffs. This cycle could repeat, with American consumers ultimately paying the price as they face increased costs for goods and a potential rise in inflation. Trump has historically pushed for job growth in traditional sectors like manufacturing, construction, and fossil fuels, where he sees opportunities to revitalize American industries. This focus could benefit states with large manufacturing bases, as well as workers in blue-collar jobs, potentially leading to job creation in those areas. However, the job market has significantly evolved, with sectors like technology, renewable energy, and remote work services now dominating. While his policies could create more positions in energy and traditional manufacturing, they may fall short of aligning with modern workforce trends. Moreover, critics argue that pushing too heavily on fossil fuel jobs could counteract efforts to grow the renewable energy sector, which is currently experiencing substantial growth. This could be a missed opportunity for job creation in fields that offer more long-term potential. As a result, while certain states and industries might benefit, others, especially those related to clean energy and advanced technology, could see less support, potentially slowing down the economy's overall growth and innovation capacity in emerging industries. Climate policy is another area where Trump's stance differs sharply from recent administrations. He has promised to roll back regulations on fossil fuels, aiming to boost oil drilling, coal mining, and gas exploration activities. These plans stand in stark contrast to President Biden's efforts, which include significant investments in green technology and initiatives to reduce emissions. Trump's approach could mean less government support for projects under the Inflation Reduction Act, which currently drives growth in clean energy sectors like solar, wind, and electric vehicle technology. This rollback could have far-reaching effects not only for the US, but also for global progress on climate initiatives. Many experts believe that reducing these investments would slow down the momentum of green technology innovation and potentially lead to fewer private investors willing to support renewable projects. This shift could make it harder for the US to compete in the global green energy market, where many countries are already advancing with substantial investments in renewable energy and sustainable technology. In the long run, this could leave the US at a disadvantage in the global shift towards sustainability, while potentially increasing emissions domestically. Trump's policies would likely impact global trade dynamics, affecting countries that heavily rely on exports to the US. If Trump imposes aggressive tariffs on imports, it could spark retaliatory tariffs from other nations, leading to a trade war that disrupts international markets. European companies, particularly in the automotive, chemicals, and consumer goods sectors, could suffer as tariffs raise export costs, making their products less competitive. This would not only hurt European economies, but could lead to increased costs for American consumers who purchase these products. For China, a renewed trade conflict with the US would create economic challenges, potentially disrupting supply chains and affecting businesses in countries reliant on Chinese manufacturing. Smaller and emerging economies, particularly in regions like Africa, Latin America, and Southeast Asia, would also feel the strain, as global trade disruptions could lead to lower demand for their exports, ultimately stalling economic growth. The interconnected nature of today's global economy means that significant changes in US trade policy could have widespread repercussions, potentially affecting jobs, consumer prices, and market stability worldwide. Another significant concern is the impact Trump's return to office might have on Middle Eastern geopolitics, particularly the tense relationship between Israel and Iran. Trump has a track record of supporting Israel, including moving the US embassy to Jerusalem and securing peace agreements between Israel and several Arab nations. His hardline stance on Iran could mean new sanctions or other aggressive measures, likely increasing regional tensions. If hostilities escalate between Israel and Iran, the effects could be profound, especially on global oil prices. The Middle East is a critical supplier of oil, and any disruption to production or transport routes could drive up oil prices globally, leading to increased costs for businesses and consumers alike. Rising oil prices typically contribute to inflation, impacting everything from transportation and manufacturing to the cost of everyday goods. Additionally, heightened tensions in the Middle East could lead to military confrontations, affecting not only regional stability, but also the broader global economy by increasing geopolitical risk and market uncertainty. Trump has consistently pushed for repealing or replacing the Affordable Care Act, ACA, which could impact healthcare accessibility and costs for millions of Americans. Repealing the ACA might mean reduced insurance coverage for low-income individuals, potentially leading to higher out-of-pocket medical expenses and an increase in the number of uninsured. Without broad coverage, hospitals may face financial strains, as uninsured patients are more likely to leave bills unpaid, leading to higher costs for the healthcare system as a whole. For the health insurance and pharmaceutical industries, a Trump-led rollback could mean more flexibility in pricing, which could lead to both higher premiums and drug costs. Meanwhile, companies focused on affordable care and telemedicine, which have gained momentum, might lose government support, potentially stifling innovation in this vital sector. In the long run, reduced access to affordable healthcare could impact overall productivity, as untreated illnesses or lack of preventative care keep more Americans from staying healthy and active in the workforce. A Trump presidency would likely mean a return to stricter immigration policies, which he views as essential for protecting American jobs. However, reduced immigration could lead to labor shortages, especially in sectors heavily reliant on foreign labor, like agriculture, construction, healthcare, and technology. In the past, many U.S. industries have benefited from a skilled and diverse immigrant workforce that fills critical gaps, driving innovation and economic growth. Fewer immigrant workers would likely lead to increased labor costs as businesses compete for a smaller workforce, driving up wages in these sectors. While higher wages could benefit American workers, they could also contribute to higher costs for goods and services. For example, the agriculture sector might face higher operational costs, leading to more expensive food products. Over time, a reduced labor supply could also slow overall economic growth and innovation, as companies find it harder to fill specialized positions that drive advancements in technology and production. Stay informed about the economic shifts that a Trump presidency might bring. Subscribe to our channel for more insights and leave a comment with your thoughts on how these changes could impact your financial future. Don't miss out on the latest updates. Hit the notification bell.